Roundtable discussion. Asnah Roundtable discussion is all about empowering and educating the community. Today we are here once again to discuss a very important topic, taxes. We all have to file our taxes at this time of the year. This is the time of the year, and I have two great gentlemen with me here to discuss taxes. But before we start, do me a favor. Please subscribe to Asnah TV, share and like the video. Invite a friend. This will be very beneficial for you and other people. So invite and share this video. My name is Essie Janin. I am the host, and I have two men with me here. I have here on my right, I have Mr. Daniel Boateng. Mr. Daniel Boateng is a CPA, and he holds an MBA from University of Maryland. He works for Fairfax County as a financial specialist. He also owns Premium Tax and Financials Liability LLC. Okay. He prepares taxes. He does business taxes, individual taxes. He also prepares financial audits, and he does bookkeeping. Thank you, Mr. Wagner. Welcome.
Thank you for having me here.
Great. And I also have on my left here Mr. Edu. Mr. Edu, Henry Edu, is a certified public accountant, a CPA. He is the owner and president of Edu Associates LLC. His accounting firm is in Alexandria, Virginia. Mr. Edu has worked for Department of Defense, Office of Inspector General, and during his 27 years of work, he's been a great supervisor. He's managed contracts, he's done financial audits, and he has supervised many accounting firms as well. So, Mr. Edu, thank you and welcome to Asnah Roundtable.
Thank you.
So, like I said, we do have great discussions on taxes. Now, gentlemen, the first question that I'd like to ask is, what is income tax and why do we even have to file our taxes? Mr. Edu, I think I'll start with you.
Thank you for having us. To start with, I want to tell you that the information that we're going to give you here is general. It may not be specific to your area. As a disclaimer that we are required to do, please consult your tax preparer. Why do you have to pay income tax? Before we do that, we have to know what actually income is. Income is any money, goods or services that you receive from your labor or from your investments. There are two types of income. We have the active income and then the participating income. Active income is what you actually get from your services, from your work, salaries and wages. Then the other type of income is your investment income. The money that you get on your savings account, the money that you get from your business profit and loss, the money that you get from your investments, all these are types of income. And you have to pay taxes on them. Not all income are taxable, but most incomes are taxable. For example, the inheritance that you receive from your parents or your friends may be taxable or may not be taxable. The alimony money that you receive, the child support that you receive, may be taxable or non-taxable. That's why we caution you to consult your accountant to see whether you have to pay taxes or not. But why do you have to pay taxes? The government is run by money that it receives from us. Since the Civil War, I'm not a history major, but I know that since the Civil War, when President Abraham Lincoln signed the first law for us to pay income taxes, we in the states here have been paying income taxes. So yes, we have to pay taxes to finance the government. We have to pay taxes so that we can all benefit from the amenities that we receive from the government. There are so many types of taxes, But today we're going to talk about income taxes, how they affect you and I as individuals, and why we have to pay taxes.
Okay.
Yeah.
Thank you. Yes. Mr.
Yeah, so what Mr. Edu said is on point, and I just want to add, like when somebody gives you something, doesn't trigger any taxes, but the giver of that gift have to pay the taxes. So we have to understand that portion also. And there are also tax exclusions, or what they call limitations. For instance, the inheritance that Mr. Adu was talking about, it's about over $1 million. So if you get to that point, then after that, if you receive inheritance above certain limitations, like 1.4 million or so, then afterwards you have to pay taxes. So IRS keep track of every those sort of inheritances that you receive from family members or anybody who give you that inheritance. So we want to just make sure that
So
it's
the
understood by
amount
public.
is how much again?
I think 1.4, like lifetime
$1.4
million
million.
dollars,
Okay,
yes.
$1.4
million dollars.
So, but that amount of money, you
Yes.
have to pay taxes.
Yes, so it includes the gift taxes. So anytime you gift somebody, I think it's 15,000 per person. So for instance, if you and your husband, you want to gift me something, you have to give me 15 and your husband give me 15. You don't have to give me 30,000 because it goes to the exclusion. It just reduces the exclusion amount. So because of that, if you are gifting somebody money, there's a form that you fill out that you give it to your tax accountant. Then he knows that Miss AC gave for 15,000 for that particular year, and Prince also gave 15,000. So it's going to be 30,000. So that one goes to reduce that exclusion that is set by IRS.
I see.
And let me add something more too. Income, either passive or active, includes a lot of things. For most of us, we have credit card bills
Yes.
that we say, I'm not going to pay, and the company forgives you. It's an income to you that you have to pay taxes on. So when you file your taxes, don't think that I didn't pay my credit card bill and the company has forgiven me, so Uncle Sam is going to let me go free. No. Taxes that you have to pay tax. It's income that you have to pay tax on. You live in your house, say, oh no, I'm not going to pay my mortgage. The company forgives you. There are certain times that you may have to, it's considered as income. There are certain times that you may have to pay a tax on that. If you're walking down the street and you find $100,000 on the floor and you take it, it's income.
Really?
To you. Yes.
This is interesting.
You have to
So-
be paying tax on that.
Yes.
January doesn't.
So let me clarify that. For example, you find money somewhere and you take it, it's income. But who reports that they gave me that money?
Well, that's the issue. I think you're going to get into this. I hope you get into the
All right.
reporting aspect of that. But technically, anything that you receive from your services, either passive or active, is income to you.
So passive means like I found it on the floor.
Yeah,
No.
passive means that you didn't work for it, more or less.
Okay.
Interest on your savings account, on your checking account, on your investment that you find on the floor, if that they are all passive.
And
So-
active means I
You
was
actually
paid.
work for
Yes,
that.
so you work for that. So one of the passive income means that you have a rental property
Okay.
that somebody manages for you. So all that you do is that you sit back, and at the end of the year, you receive your income from your property. So it's termed as passive
Passive.
because you are not involved in the management of the property. So that is what it called passive income.
Okay. So we are going to learn a lot of terms as we get along. So pay attention, don't go anywhere, stay with us. So let me ask another question. What is the period for the tax season? And must we file within the tax season?
Yes.
Let's go, Mr. Parker.
Okay. Yeah. So the tax. Talking about the tax season.
The times,
The time.
period.
So the taxes, we have two forms of the periods. One is calendar year, and the other one is fiscal year. So the calendar year is from January to December,
Okay.
1st of January to December 31st. So most taxpayers, like individual taxpayers, will follow that schedule from January to December. Most companies do what they call the fiscal year. Like for instance, the counties, governments, they do every 30th of June is the end of the fiscal year. So then the new year starts July 1st. If you remember, Virginia, July 1st, all the laws comes into play. That is where the new fiscal year starts. So because it's not 31st December, it's called fiscal. It's any month aside December 31st.
Okay.
And most of individual taxpayers, we use the calendar year.
Okay.
So that is what it is for when you have to. So for instance, we are in 2022 now. The tax season for last year, which is 2021, started from 1st January of 2021 and ended 31st December of 2021. So any activity that happened within that period, you have to file taxes on in that period. And we file the taxes the following year.
Okay.
But the tax year is 2021.
Okay. So it's due, your taxes are due.
So the taxes, so it's different. So the taxes are, IRS always set the date that the taxes are due.
Okay.
This particular year, they are talking about 18th April.
I see.
So they opened the tax season 24th of January, which is about 2 weeks ago. It's going to run through 18th of April. Now, why 18th April? Because normally it's 15th April. It is because DC, Washington DC, we know it's not a state. That's the capital. They have what they call Emancipation Day. And it falls on the 15th of April, which is a Friday. So because of that, IRS saying that, hey, we want to give that as we want, because of the Emancipation Day, we want to just go to the next day, next filing day, so that they are just waiving that 15th. But 15th falls on a Friday. So because of that, the next business day is Monday, which is 18th. So that's why this year the taxes will end on 18th. And it's very, very important, that particular time frame, because if you don't file your taxes by 18th of April, then if you own, you have tax liability, then that is why the interest will start to accrue. It's interest and penalties. If you are going to get a refund, you don't have any problem.
Okay.
Yeah, but if you are going to own, which you don't know because you have not filed your taxes. So that is why we encourage people to file, not to wait at the last minute. File before that deadline approaches, because you don't know what is going to be entailed in your taxes.
I see. So file your taxes by April 18th
Yes.
this year.
Yes.
Otherwise, you're going to have an accrual on your taxes.
If you have a liability.
If you have a liability.
Yes.
So we are going to take a short break and we'll be right back. Don't go anywhere. Stay right there. Thank you.